A speculator is not measured by his ability to be right, for in a great bull market even a fool can be right and show a profit. Nor is he measured by the size of the fortune he accumulates, for fortunes can be built on luck and lost through ignorance. The true, final, and unforgiving measure of a speculator is his ability to come back after he has been utterly and completely destroyed. It is the science of the comeback that separates the master from the amateur. This is the story of the greatest of all such comebacks. It is the chronicle of a time when the man known as the Great Bear of Wall Street, the speculator who had bent panics to his will and accumulated millions, found himself not just broke but more than $1 million in debt. He had lost everything, but worse, he had lost himself. He had fallen victim not to a misreading of the tape, but to the one enemy he had sworn never to surrender to: the persuasive, friendly, and authoritative opinion of another man. In the great cotton market, he had listened to a charismatic expert named Percy Thomas and had violated every single one of his own hard-won principles. He had failed to cut his losses. He had averaged down. He had held on through hope. The result was a ruin so complete, so profound, that it would have permanently broken a lesser man. He was cast out of the great game, a fallen king, his nerve shattered and his judgment clouded by the immense and suffocating weight of his debts. This was not merely a financial failure. It was a spiritual crisis. This entire dramatic account of ruin and rebirth is one of the most powerful and instructive chapters in the life of the world's greatest speculator. The story, with all its painful lessons, was masterfully documented by Edwin Lefèvre. A link to his essential work, Reminiscences of a Stock Operator, can be found in the description below this video. To understand the comeback, one must first understand the depth of the defeat. The psychological burden of a great financial loss is immense. But the burden of a debt so large that it seems impossible to repay is a different kind of poison. It paralyzes the will. Livermore found that he could not think clearly. The need to make money not for profit but merely to pay back his creditors distorted his every judgment. He would force trades where no opportunity existed. He would scalp for small, quick profits, a game he had long since abandoned because the fear of another loss was too great. He was no longer speculating, he was gambling, and his mind knew it. A speculator cannot operate successfully when he is in a state of fear and urgency. The mind must be calm, patient, and objective. His was in a state of constant turmoil. He realized a profound and difficult truth. He could never come back as long as he was carrying the ghost of his old failure on his back. The $1 million debt was a chain that tethered him to his past mistake. Before he could move forward, he had to cut that chain. This led him to make a decision that was both strategic and deeply humbling. After a year of fruitless struggle, he filed for bankruptcy. This was not an act of dishonor in his mind, but one of cold, practical necessity. It was a surgical operation to remove the cancer of his old debts so that his mind could be free to function again. He needed a clean slate. The bankruptcy discharged his legal obligations, but it left him with something far more important: a profound moral obligation to himself. He made a quiet vow that if he ever made a great fortune again, he would repay every single creditor down to the last dollar. This became a new, powerful, motivating force. Now, free from the crushing weight of the past, he was faced with a new problem. He had no capital. He was a great general with no army. A man cannot speculate without money. He was forced to wait, to observe the market from the sidelines, a painful and frustrating position for a man whose entire life was the game. After a period in this wilderness, a brokerage house that remembered his past genius and believed in his potential offered him a small stake. It was not a loan, but a line of credit. They would allow him to trade a line of 500 shares. This was a moment of profound humility. The man who had once single-handedly traded lines of 100,000 shares of stock, the former Cotton King, was now being granted the privilege of trading the stake of a small-time amateur. But he accepted it with gratitude. He knew it was his one and only chance. He could not afford a single mistake. This tiny stake forced upon him a level of caution and discipline that even his greatest successes had not. Every trade had to be perfect. And so the reborn speculator began his work. He was no longer the bold boy plunger or the arrogant great bear. He was a humbled, cautious, and intensely focused professional, armed with a complete and perfect set of rules forged in the hell of his own failure. The world at this time was plunging into the Great War in Europe. This colossal event was reshaping the global economy, and by extension, the character of the stock market. Livermore, his mind now clear and objective, began to study the tape with a fresh perspective. He saw that the war was creating a new and unprecedented set of conditions. It was the birth of a violent, powerful, and historic bull market, a war boom that would dwarf all that had come before it. He knew with the certainty of a master diagnostician that a great opportunity was at hand. He saw that the line of least resistance for the entire market was turning decisively upward. The old peacetime stocks were dormant, but a new class of stocks, the war babies, were beginning to stir with immense and powerful life. He applied his great principle of identifying the leading groups. It was clear to him that the industries that would profit most from the war were the steels, the shippings, the motors, and the chemicals. This is where he knew he must focus his limited capital. He was not interested in the market as a whole. He was interested only in the strongest stocks in the very strongest groups. He was hunting for the new generals of the bull market army, and he soon found his primary target. The undisputed leader, the one stock that embodied the entire power and fury of the new bull market, was Bethlehem Steel. It was the premier armaments manufacturer, and its business was booming. But he was not interested in its business. He was interested only in its action on the tape. The stock was acting right. It was emerging from a long consolidation and was beginning to make new highs on explosive volume. It was a thoroughbred, pawing at the starting gate, ready for a great run. He knew this was the horse he must ride. With his tiny stake of 500 shares, he waited with the patience of a sniper. He did not try to anticipate the move. He waited for the one true signal, the breakout at the pivotal point. When the moment came, when Bethlehem Steel broke out into new high ground with authority, he made his first move. He bought his entire line of 500 shares. This was the beginning of his great comeback. The market immediately validated his judgment. The stock did not hesitate. It continued to advance with great power, and his small position quickly showed him a handsome profit. This initial profit was more than just money. It was a profound psychological confirmation. It was the market telling him that his old skill, his true genius, had returned. This profit now became his risk capital. He was no longer trading on the brokerage house's credit. He was trading on the market's own money. This is a key principle of the master speculator. He risks his own capital only on the initial probe. Once a profit is established, the trade itself finances the campaign. With this new capital, he began to apply his perfected pyramiding strategy. He bought another block of Bethlehem Steel at a higher price as the stock continued to demonstrate its strength. He was reinforcing success, not subsidizing failure. As his profits in Bethlehem Steel grew, he began to branch out, taking positions in the other leaders of the other strong war groups. He bought the shipping stocks, the motor stocks, the chemicals. He was building a concentrated portfolio of only the most powerful and fastest-moving stocks in the market. He was not diversifying as the amateur is taught to do. He was concentrating his forces on the key strategic points of the battlefield. He was running a small elite army of thoroughbreds, not a vast, slow-moving herd of plow horses. His fortune began to grow, first slowly and then with astonishing speed. The power of the great bull market, combined with his mastery of the big swing and his pyramiding tactics, was creating a new and even greater fortune than the one he had lost. He was sitting tight. He held his key positions for months, riding the great trend through all its minor, healthy reactions. He was not tempted to snatch his profits. He knew from his past failure that the true life-altering money was to be made only by having the courage to ride a great move to its logical conclusion. His mind was clear. He was trading not on hope or fear, but on the cold, hard facts of the tape. He had learned his great lesson. He was a master, in full command of his craft, and more importantly, in full command of himself. As his new fortune grew from thousands to millions, he never forgot the vow he had made to himself during his darkest days. He had been legally discharged of his debts, but he had never been discharged of his own sense of honor. He called a meeting of his old creditors, the very men who had been forced to write off his debts in bankruptcy court. He sat them down, and one by one he paid every single one of them back, to the last penny, with interest. This act was not a legal necessity, it was a spiritual one. It was the final act of his comeback. It was the moment he not only regained his financial standing, but also his own self-respect. He had closed the books on his greatest failure, not with an act of legal evasion, but with an act of profound personal honor. This great comeback from $1 million in debt to a multi-million-dollar fortune was the ultimate synthesis of all the lessons he had ever learned. It was a testament to every principle he had ever preached. It was a lesson in the danger of listening to tips and the necessity of independent thought, the lesson he had paid for so dearly in the cotton market. It was a lesson in the supreme importance of trading in harmony with the general market trend, of identifying the leading groups, and of focusing one's capital only on the strongest of the leaders. It was a lesson in the science of the pivotal point, of the power of the probe and pyramid method of entry, and of the absolute necessity of cutting losses without hesitation. And above all, it was a lesson in the character of the speculator himself. It proved that a man is not defined by his mistakes, but by his ability to learn from them. It showed that a great loss can be a gift, a cleansing fire that burns away the ego and the bad habits, leaving behind only the pure, hard steel of a perfected philosophy. The speculator who has never been truly broken, who has never had to face the abyss of his own failure, has not yet completed his education. For it is in the darkness of ruin that the brightest light of understanding is often found. Livermore's greatest comeback was, therefore, not just a financial recovery. It was a psychological and spiritual rebirth. He had to lose everything to finally master the last and most difficult element of the game, himself. The story stands as a timeless monument to the power of resilience. It is a testament to the fact that no defeat is permanent unless one accepts it as such. It is the ultimate proof that a man can lose his money, but as long as he does not lose the lesson, he has lost nothing of true value. He emerged from his trial by fire a new man, a more complete and more powerful speculator than ever before. He had faced his own worst enemy, his own human weakness, and he had won. This was his greatest and most lasting victory on Wall Street,